Greetings traders and welcome back to today's video. It's been a while since our last upload and I'd like to begin by apologizing for the inconsistency in content. I had committed to releasing videos weekly, but balancing both trading and my professional work in the field of architecture has proven to be quite demanding. Fortunately, I work remotely, but even so, the workflow has required some adjustments in my trading approach to maintain both effectively. As a result, I've shifted away from lower time frames and returned to a multi-time frame analysis approach. Along the way, I've made significant changes to my psychology, risk management strategies, and overall trading workflow. These are experiences I will be sharing with you in upcoming videos in the hope that they'll add value to your own trading journey. So going forward, the plan is to release weekly Outlook videos alongside the mentorship series, which will resume next week. These outlooks will give you a chance to see how I practically apply the mentorship concepts in real market scenarios. Thank you for your patience and continued support. Let's grow together in both skill and discipline. May the Lord bless you. Okay, cool. So let's get to the video. So we'll be going through these pairs, right? The ones with the ones highlighted. Those are the ones that I'll be focusing on throughout the week. And so I hope this video helps to give you guys an idea in terms of what I'm going to be anticipating. Please do also do your own further analysis. All right, this is just a outlook or my own personal outlook, which can be further discussed and so on. Right. In any case, what I'd like to get to first is just to give you guys a brief, uh, you know, concept in terms of how I look at my higher time frame analysis. This is the weekly time frame. How the market generally moves is that every single time you'll get the market moving from external range liquidity being your buy stops and sell stops. Your external range will always be at a high or low. And so after external range liquidity has been taken, meaning these highs, the market will then draw in towards internal range liquidity, which will be your fair value gaps, your order blocks, that type of a thing, right? So just briefly, you'll notice how external range liquidity is taken, the market draws into internal range. After that, external range liquidity is taken, being the buy stops. External range liquidity is taken there as well. We can go ahead and mark that. Those are so weekly buy stops. After these buy stops, being external range is taken, then we see the market draw into a fair value gap. So that's how the market tends to move, right? From internal, the market will draw towards external. Now that we've taken out external, what do we anticipate next? For the market to draw towards internal. So if we see a fair value gap, our next draw is towards that fair value gap. So immediately on a weekly time frame on EURUSD, we can anticipate in this week the likelihood of price action having to draw into this weekly fair value gap. But now let's look at our lower time frames, our 4-hour time frame, where we'll get a narrative as to what we can anticipate for, in terms of clear evidence of whether the market will look to pull back into the fair value gap or is it going to continue towards the upside. So let's look for that evidence. Cool. So this is our 4-hour time frame. We can see that those are the weekly buy stops that had been taken. And so let's just pause. Cool. I just wanted to add that to the watermark, that time frame there as well, right? So this is the 4-hour. We can see the buy stops had been taken over there. What we want to see on the 4-hour is a clear indication that the market might look to switch in its character, right? We can see that this entire time we had been bullish, prices making higher highs and higher lows, right? And so if we'd like to see the market pull back into that weekly fair value gap, we need to see the evidence of this on the 4-hour. What is the evidence? We want to see a market structure shift. Now, market structure shift is different between is very different from a break of structure. A break of structure would mean that this low gets broken because price is making a higher high, higher low, higher low, and then higher high. So once price breaks that point, we can then say the market is bearish. A market structure shift is just price having to take out a low, which is an indication that internally, you know, there might be evidence that of selling, basically, right? So the evidence of selling over here is the fact that we can see that after these buy stops get taken, we get the rejection block. Price should have made a higher high, but instead price breaks this low. That is a market structure shift, clear indication that now we might be switching from the buy side of the curve going into the sell side of the curve. So since we got that market structure shift, what do we look for next? We want to look at certain PDRAs which we could sell off of. So for me personally, coming into this week, what I am looking at as a first array is this rejection block. This counts for me as a rejection block. We took out these buy stops over here, right? And upon taking out those buy stops, I have a clear idea that selling had been initiated over here because we see the rejection. These are buy stops. And if we pull our fib from that high to that low, we can see that this is the 50%. We're currently at a premium price relative to that high and that low. And we are at the 62 to 79% fib retracement levels, which are good levels to see uh, you know, possible reversals, that type of a thing, right? And these levels as well are aligned with that rejection block. So coming into Monday, right, once I hit my kill zone, if this rejection block is still holding, I'll look for confirmations on the M15 for selling, right? But the next area, if this area fails, will be this rejection block over here, which will be my last area of resistance. If this area gets broken through, then potentially we might not get that reversal into that fair value gap, right? So like I said, buy side of the curve, now we are in the sell side of the curve, or we're anticipating that price will continue lower. And then potentially when we get into this fair value gap, we can potentially get another market structure shift towards the upside and potentially go into another buy side of the curve. So that is for Euro USD. Moving on to USDJPY, this is the weekly time frame, like I explained earlier. The moment you take external range liquidity, right, we see how the market pushed low, took out the sell stops over there. What do you anticipate next? For the market to pull back into internal range liquidity. Now we see how it pulled back into that fair value gap, which is also aligned with this bearish order block. So another thing we notice is that if you have this middle line running there, right? When it comes to order block, that middle line is considered as a mean threshold. This is a very good order block because of the fact that price rejects that middle point, that mean threshold, right? You tap into that order block and price rejects it heavily. We're also aligned with this fair value gap. If I just delete that guy, notice that fair value gap, that middle line over there is called the consequent encroachment. This is a very good order block, very good fair value gap as well because of the fact that we didn't even touch that consequent encroachment, which, like I said, gives you a clear indication that that is a strong area of resistance or a strong fair value gap. This is a strong order block, right? We see how the market rejects heavily towards the downside. This is a clear indication that a large sum of orders, sell orders, or um, pool of orders or uh, a large order itself had been entered into the market by institutions, right? Resulting in this rejection block. All of that buying had been rejected. So we see how the market pulls back, taps into this rejection block there, taps into the rejection block. Price reaches that mean threshold of the rejection block, but then rejects it and closes below it. So we got a clear indication that we have high level of resistance over here. And so what do we want to see? We pulled back into internal range price action. What do we want to see next? A possible draw towards external range price action, which is where our liquidity pool is resting. Let's go on to a smaller time frame. Cool. So this is our 4H time frame. We see our price pulled back into that rejection block. After pulling back, what we want to anticipate, a market structure shift or break of structure. In this instance, we got a break of structure. And in price having to break that point, we immediately know because a low had been taken out, what is that low regarded as? As external range liquidity. Sell stops rest over there. So after external range liquidity is taken, what we anticipate for the market to pull back into internal range, we get that fair value gap. which is being rebalanced over there, you want to sell at this point, right? You always want to follow what the higher time frame narrative is doing. So the higher time frame narrative is bearish. We pulled back into a bearish PD array, and then from this region, we want to look for selling opportunities, right? We will get into the mentorship and talk about what sell stops mean, what exactly happens at these areas, why does price buy against the sell stops, that type of a thing. We will get into that, right? So external range gets taken, we pull back into a mitigation block in this instance. Price moves from internal to external. And in this case, we move from external to another external over there. Overall, we are bearish. We are in a sell program. Price broke this high, which is a false break, which is also regarded as a turtle soup model, right? Which, like I said, is a false break of structure. At this point, we are seeing that the market is interested in the liquidity that's resting above that high. Buy stops rest at this high. The institutions know that, and therefore they'll enter or order pair against these buy stops. These buy stops are going to be seen as willing buyers at a premium price to sell against, right? And so we get that indication that the market is selling. This candle fails to break this previous candle's high. Instead, the body goes beyond this candle's wick, my bad, closes beyond the candle wick, but then we get price pushing towards the downside. If we have that middle line there, we can see how that mean threshold is being respected, right? And so these are areas that I'll be looking at throughout this week. This fair value gap over here, that one over there, and that rejection block. If price does break this high, then this false break of structure fails. That model fails. We are not going to look to sell USDJPY until we get further confirmation to do so. But these are the areas that I'll be looking to focus on the M15. Once my kill zone gets hit, I'll look for selling opportunities over here. If we break this region, we might sell over there, and that's my last area of resistance, right? So that's what I'll be looking at when it comes to USDJPY. Cool. So moving on to AUDUSD, this is the weekly time frame. Again, what happens in price action? We see how the market pushed heavy towards the upside. Buy stops got taken over there. Buy stops got taken over there. That's regarded as external range liquidity. From external range, we want to see the market pull back into internal range liquidity. We see that there's a fair value gap over here, but you'll see that I noted it as a breakaway fair value gap. Why is this the case? This is the case because of the fact that we have this array, which is regarded as a redelivered rebalanced price range. When you have a redelivered rebalanced price range, price most of the time won't look to pull back into the fair value gap. It will just look to pull back into this region. From this region, it will find a support and it will continue higher. We will unpack why this works when we get into the mentorship series, right? So this is my next draw on liquidity, and then potentially here we'll get further continuations towards the upside. Let's look at the H4. What do we see on the H4? We continued higher. What is this? This is a break of structure. External range liquidity got taken. Price pulls back where? That is another BPR over there. We will talk about that in later stages. We do have this good order block resting at heavy premium prices. Price does also wick above that, right? Taking out the liquidity at the body of the candle. We see it respect. We see price closes below that mean threshold and then starts to reject it. So this is a nice area, good resistance area to anticipate further sell side. We take out external, price pulls back into that order block again. What do we anticipate coming into this week? We'd like to see price action. I'd at least like to see price action pull back into, in fact, price might not pull back into that fair value gap because we do have this region over here, which is our redelivered rebalance price range, right? And so this might be a breakaway gap. We might not see price pull back there. And even if it does, it's just waiting for confirmation on our lower time frame to sell off, right? Price pulls back here, wait for confirmation to sell off, right? Cool. Let's move on. Okay, cool. So you got the gist of things. We're going to move a lot quicker now, right? So external range liquidity got taken, price pulls back into internal range, fair value gap got filled. We have that rejection block holding over there. Notice our price is rejecting that mean threshold. And then coming into last week as well, we reject that mean threshold. Overall, we're looking for bearishness, right? Let's go on to the H4. Cool. This is the H4 time frame, and this is one of my favorite models that I like looking to that I like having to see within the market. We can see over here that we've clearly had this good resistance zone over here. And so this is regarded as an engineered resistance liquidity zone, right? It's engineered because the algorithm has made this, it engineers, it manufactures this resistance because people are going to draw a resistance and they're going to consistently look to sell it. Where do their stop losses reside? At those highs. So the algorithm at some point will break this area, will enter a large order, look at that heavy volatility towards the upside. All of the people who had been selling are going to be seen as buy stops to sell against, and a large order will be sold against those buy stops. And so what I'm waiting for in AUDUSD is just a market structure shift towards the downside, and then I'll be looking for further confirmations on bearish PDRAs to continue the potential narrative, which is towards the downside. Cool. Again, Euro GBP, external range got taken. We pull back into internal range. We have that order block down there. Look at how that mean threshold is being respected. The next draw on liquidity is external range liquidity. Let's go on to the H4. On the H4 time frame, we have this nice fair value gap over here. We can see how we're respecting the fair value gap. We haven't closed below it. We went below that consequent encroachment. We went above it. There's also another fair value gap in here which is being respected. So coming into this week, I'm anticipating further bullishness, and so I'll wait for a potential PDRA. If price is still in this area, I'll potentially look to buy and continue that narrative. Going on to EURJPY, again, external range is taken. We might see the potential likelihood of pulling into a fair value gap. Let's go on to the H4. Looking at EURJPY on an H4, all I'm anticipating is a potential market structure shift towards the downside. And the moment I get that, then I'll be looking at bearish PDRAs that will allow me to look for those selling opportunities until I reach this area over here. Going on to GBPCHF, again, external range liquidity has been taken. We pull back into internal. And so what are we anticipating next? A draw towards external range liquidity. Let's look at the H4. Cool. So you'll see going in from last week Friday, I am currently in a trade over here. But again, when we get to the mentorship, I will break down all of these things. This is a reclaimed order block, which is a good resistance zone that I've used from the buy side of the curve. It works over here. At some point, it was a support. Now we want to look at it as a resistance zone to push price action towards the downside. So currently, that's where I have a position, and I'm going to continuously look for selling opportunities until we get to that area over there. Cool, this is USDCHF. We took out external range liquidity. We have a fair value gap, really nice fair value gap, which we'd potentially want to see price draw into. Looking at the H4, that's that fair value gap over there. We already got the break of structure or market structure shift. External range liquidity has been taken over here. And so what do we anticipate price to pull back into internal? We have that fair value gap aligned with the mitigation block. If price is in this area, I'll be looking for buying opportunities in my kill zone to target that area over there. Cool. NZDCHF, right? We see how external range liquidity got taken. We pull back into internal. Fair value gets filled. Notice how we're respecting that consequent encroachment. The next draw is towards that point over there. So looking at the H4, we do have that reclaimed order block, which acted as a support. Now we're looking at it as a resistance since we closed below it. And so what I'm looking for in this week is a potential confirmation to continue price lower. Any bearish array, even if we take out that low, this will be regarded as a mitigation block to still look for further sell side towards the downside, right? Looking at EURNZD, we took out external range liquidity over there. We pulled back into a fair value gap with that auto block. We're respecting that area. And so what we anticipate next is for price to reach out for that liquidity pool towards the upside. Now, just looking at the H4, we can see that we have multiple arrays. We have that redelivered rebalance price action, price zone. We have this mitigation block. These are areas that I'll be looking at. And so if you do not understand all of these arrays that I spoke about, do not worry. I will teach you each and every single one of these arrays. You'll be able to open up a chart and know exactly what to do next. But with that being said, kind regards, the architect.